Live studio. I am with you, Kavita, and with me is my colleague Kanushka. And in next 1 hour, we'll be talking about your stock-specific queries. That's right. It's the only show where straight for 1 hour we'll be answering your stock-specific queries. So just in case you haven't yet sent us your questions, you can do that on the number that's flashing on top of the screen. That's our WhatsApp number. Send across your stock-specific queries. Write the name of the stock, the price at which you bought it, and the time till which you want to hold on to that. We have our experts live who will address your queries, and also if you want to talk to them, you can also ask our team to call you up and we will give you a call and you can talk to our experts directly. But then, Kanishka, what's happening in the market? The market is swinging between greens and red, and yes, definitely the IT pack looks very strong. But having said that, the market again has gone down and looks very flat. Look at the market bet, 1470 and 64 declines. So yes, it's 25,936. Once again, we are below 26,000. Even the broader markets are not participating right now, as we can see. Nifty mid cap 100 almost flat, and small cap definitely in red. But then PSU, it's almost 0.5% up. But then look at reality. After a long run of non-performance, we can see, or underperformance, now we can see the index also up almost more than 1%, and defense sector definitely we can see in green today. So, but then what's buzzing on the charts, Kanishka? We can see, transformers, rectifiers almost down more than 4%. HAL, GRAC, all these counters are not doing well.
Absolutely not doing well, but we do have some counters that are limiting the downside, especially on the Nifty, the likes of Hindalco, BEL, like you pointed out, the defense space, SBI, Dr. Reddy's. They are limiting the downside as far as the Nifty is concerned, but lots of individual stock action as well as we are seeing. Solex Energy, for instance, has hit its upper circuit. This is after the company commenced its manufacturing of solar photovoltaic modules with a 2.2 gigawatt facility in Surat. That's the latest update that we have. Still some action is what we are seeing in the mid-cap space as well. For instance, Paras Defense, that has signed a memorandum of understanding with Inter-University Accelerator Center. This is for a commercial grade MRI magnet system for indigenous manufacturing, and this stock is holding good 0.7% of gains, and that's pretty good given the kind of muted trend that we are seeing in the market. Otherwise, there's Seagull as well, which is holding up well. It has received a letter of intent from REC Power. This is to establish and maintain Welgaon substation. So yes, positive moves over there as well. 0.5% of gains coming for Seagull India. On the other hand, LG Electronics is back in focus because Jefferies has initiated coverage with a buy rating and a target price of 1900. So yes, 1.2% gains coming for LG Electronics. But let's get started then. And today we have Lancelot Dicuna, the Chief Investment Officer of ValueX Wealth Connect, joining us. And of course, we have Kunal Bothra with us in the studio. Well, Kunal, let's start with talking about the markets first of all. Swing trade coming for us. We just hit the 26,000 level just a couple of minutes back, and again we are down to that, below that level. So where do you see us ending the week? As far as this week is concerned, it was a very weak start for the week yesterday, and today again it's a swing trade coming in. But where do you see the market headed in this week, and how do you expect us to end this week?
Good morning. So yeah, I think it's been a tough series for the November series. The entire month for the markets, we've swinged towards 26,200 mark. I think missed the all-time high by a margin of 30-35 points, and now we are back again below the 26,000 levels for the index. Of course, on the back of what's happened across the globe and the kind of selling pressure which has emerged. But my sense is that the last 2 months, the markets have gone through a recovery phase. There has been a lot of repair process for the indices. We've moved from 24,500 mark. We've shifted the base higher to 26,000 levels broadly. So from the expiry perspective into the next series, I believe that the markets are going into a slight bullish tone, and with the expectation of RBI rate cut also, I think that could probably be one of the reasons why the markets would probably want to carry forward the long positions into the December series, at least in the first half. So I think in that expectation, I would expect the index to stabilize at this 26,000 mark plus minus 200 points for the next couple of days.
All right, so that's the take on the market and the market setup. But then let's begin with our viewer queries, and let's take our SMS question that's coming in from Bengaluru, Anupama. Lancelot, I come to you. So she says that she's bought 2,300 shares of NTPC Green at 106.30, and she has not given us the time frame. But then, yeah, what will be your recommendation on this NTPC Green?
Yeah, I think from a longer term perspective, yes, it is positive. But if you look at the valuations, it is a little bit on the higher side. It probably trades at about 130 times forward earnings. So, this stock really has to generate huge amount of profits to be able to justify its current valuation. So from that perspective, if one is sitting in profits, then one should look at booking profits. And if one has to look at buying the stock, then one should always wait for a big correction, and then one can look at adding the stock.
All right, so that's the view on NTPC Energy. But next up, let's take one other query which is coming from Nellore. Mr. Narsima is joining us. Hi, Mr. Narsima. Thank you so much for joining us. Please tell us what's your query.
Good morning, ma'am, and good man, everybody. I have a little throat problem. Can you understand?
Yes, you're very much audible. Please tell us what's your query today.
I hold 300 shares of Hindustan Unilever at the average price of 2620.
Right.
2620. Can I hold or sell them? Please advise.
All right. What's your holding time horizon? How long are you looking to hold HUL?
3 years I can hold.
Okay, okay. Lancelot, let me come to you. What is your view on HUL? The viewer holds 400 shares of HUL at a price of 2,620 rupees. He's looking to hold for another 3 years. What's your view on this, the FMCG pack as a whole?
So, I think one is that immediately one should hold it because we are in the midst of the demerger between, Hindustan Lever is exiting or it's separating its quality walls business. And at this point in time, those shareholders of Hindustan Lever, as of 1st December, they will get shares of quality walls. So that unlocking should help in terms of, holding, giving giving you some additional shares. And then probably when one looks at both the businesses, you can probably decide to add. But if you look at a 2 to 3 year horizon, I think given the cuts that we've seen in GST and the lowering of income tax slabs, these are all positive for the FMCG consumption area. And while consumption has been slow initially, I think it will grow and we will see some volume growth. And Hindustan Lever having very strong power brands, longer term, it would be a good company to accumulate and hold on to this.
All right, so that's the take coming on HUL. But then let's move on. This question is from Major BV Naik from Pune. And Kunal, I'll come to you. He's a long-term investor and he's holding 250 shares of Tata Motors PV. So he wants to know if he can add more at this time.
So I think you can look to add the stock at current levels. Short-term wise, the indicators are getting oversold for Tata Motors PV. The stock has corrected almost 50%. So when you look at this price adjusted, 700 was the high for Tata Motors PV in 2024 mid, and from there the stock is almost at 350, 355 levels. So that's a decent 50% correction. And historically also, Tata Motors PV has been one of the stocks which goes into those 40% to 60% correction zones. But then long-term wise, this becomes a very good opportunity for traders to try and accumulate further or maybe even start buying for those who have missed out on the previous leg of rally. So I think that's a very good territory or a zone for traders who are looking to buy the stock, specifically if your time horizon is at least 1 to 2 years or more for such stocks. So if that's the case, then yes, Tata Motors PV at current levels could be a good buy.
All right, so Tata Motors PV could be a good buy at a current level. But moving on to the next query then, we have our caller Thomas George joining us on the phone line. Hi Thomas, good morning. Thank you so much for joining us. Please tell us which stock is the one that you're looking for advice on today.
Yeah, I'm holding Gabriel India 200 shares for the last 1 year. The purchase price was around 900 rupees. And it's a reputed company with a good corporate governance and market share and very high reputation for the product quality. So should I hold on to this for long term or should I book my profits? So what's your opinion?
Okay. Thomas, how long do you wish to hold if you do?
So again, I can hold it for 1 or 2 years more.
Okay, okay. Lancelot, let me come to you. Gabriel India, what are your thoughts? Can it be held for another 1 to 2 years?
So, Kanishka, if you look at Gabriel India, the results have been good, and the fact that auto companies and auto component companies are going to see increased business over the next couple of years should provide Gabriel India with improvement in its net profits as well as earnings per share. But at this point in time, it's also trading at a slightly higher valuation, trading at almost 57 times its trailing earnings, and which would be around 40 times forward earnings. So given that background, if one has made sufficient profit, then and you are holding a significantly large quantity, then it is better to book some profits, maybe 25-30%, and then keep holding on to the balance. If you have a smaller quantity, then one can just continue to hold, because I think the best would be yet to come in as far as Gabriel India is concerned.
All right, so Thomas, you can book a part profit. Any other question that you want to ask?
Thank you so much.
All right, all the best. Let's move on to the other SMS query. And Kunal, this is coming in from Mohit, Ludhiana, and he wants to know about Star Health. He says that he's got 200 shares of Star Health at 590, and again, it's a long-term time horizon. For 3 years, he wants to stay put out here.
So you can continue to hold on to the stock, but I would not suggest to add the stock at current levels, because it looks like that on the longer term charts, the stock has a tendency of going through a process of a rally or a bounce and then going to a phase of a correction. Right now, the good part is that the stock is trading above the key moving averages, the 200 DMA, the 50 DMA, etc. for Star Health. So that could be a positive. But then I would believe that in the next corrective phase, there could be a possibility that the stock may come back towards 440, 450 mark before it settles off and completes that pending corrective wave. So I think in that sense, you can continue to hold on. But averaging wise, I would suggest to wait out for at least 440, 450 mark for the stock to correct towards.
All right, so those are the levels that you must wait out.
You can send across your stock-specific questions on the WhatsApp number that's flashing on the screen, and we will get it answered by our experts. But then let's move on. And this is a question from Nikhil Sharma from Bombay, and he says that he's an intraday trader, and he in both short-term and long-term investments he's done. He's got 15 shares of Tata Communications from 1923. That's the price, and the target predicted is 21.28. When would be the right time to exit the stock? Lancet, I come to you with this. Tata Communications target he's expecting is 21.28.
So is this for me, because the short term,
Yeah.
it's a short term trade?
So he is short term, but then he can make it long term as well, depending on the advice that you give.
Yes. So I think Tata Communications on a longer term basis is definitely a good company to look at, because it is involved in it's involved in providing all the back end communication for the entire data and voice transmissions between the continents. It also owns the undersea cables that are there for the data communication between countries. So from that perspective, yes, the stock has maybe it is a longer term attractive business, a lot of capital expenditure involved, and presently trading at a PE of 31 times its earnings, which is fairly reasonable. It's a little high priced at the moment, but that if one can hold on to it, I think you will get longer good returns over the next 2 to 3 years.
All right, so that's the view on Tata Communications. But let's move on and take the next query. This is coming from Prathamesh, who's written to us from Mumbai. He's been holding 200 shares of AB Capital at a price of 255 rupees. He wants to know whether he should hold or book his profits currently. If the advice is to hold, he can hold on for a period of about 6 months. Kunal, this question is specifically for you. What's your view?
See, I would definitely recommend a hold on AB Capital. I've been advising the stock since quite some time over the last couple of years. But I believe that 6 months may not be a good enough time frame for you to hold on to the stock if you're looking at trying to encash the larger trend for the stock, because it's going through one of the better phases of the price rally over the last 1 year. We've seen the stock evolving from 180 levels, 175 levels at the start of this year to almost 330, 340 levels where it's trading right now. So which means that we could be looking at the further upside over the next 1 to 2 years. But then the only concern is that 6 months may not be a good enough time frame. If you're okay to hold on to it for another couple of years, then I believe it makes a lot of sense to hold on to the stock from current levels. If not, then I think at 350 330, 350 levels where it's trading right now, it's a good enough zone for you to book profits. So it depends on your time frame.
All right. So depending on the time frame, you can book your profits and strategize ahead. But then let's move on. This is Ramesh from Hyderabad, and again, it's a long-term perspective. I'll come to you, Lancelot. He says that he's got Vinati Organics, 4,800 shares and 5,000 shares of Gujarat Gas. He wants to know as to how long can he be in this investment, and also in terms of company front, if you can explain him the fundamentals if you track them.
I think as far as Vinati Organics is concerned, it is trading at relatively it's at about 1600, and the PE ratios are a little on the higher side. It's about 38, which is much above its 5-year long-term average. So from a valuation perspective, it does look expensive, although there has been some interest in the longer term output of companies that are manufacturing chemicals, and especially exports to Europe and US, where the companies over there are looking to diversify their procurement from only China, and that could give it opportunity. But in the shorter term, because there's a lot of overstocking and supply of these chemicals in the markets, prices have sort of come down. So margins as well as volumes are going to be muted for the near term. So, and if one is is holding it from a longer term perspective, and if you have a larger quantity, it might make sense to book profits and wait for a price correction to add to the portfolio. As far as Gujarat Gas is concerned, I think it's a good company. They are doing distribution as well as generating gas from the gas fields. So that business is growing because the dependency of gas uh, you know, is increasing over time, as well as the pricing has been increased over time. So Gujarat Gas, definitely one can look at holding on for the longer term as well.
Okay, so you could consider holding Gujarat Gas for a longer term period. But moving on to the next query then, this one is on Anant Raj. A regular viewer, Ignatius, has written to us from Kolkata. He's asked about Anant Raj. They have 50 stocks at a price of 592 rupees. He wants to know what are the stop loss and targets that he should track for a period of about 6 months to 1 year. Kunal, what is your view on Anant Raj?
See, I think, first look at it this way, that the last 4 or 5 years, stock had done fantastically well, from point when the stock was sub 100 towards a point when the stock hit 950, 960 mark in 2024. It's done exceptionally well. So after this kind of almost like a 10x rally, the stock is now going through a time-wise consolidation. There would be a zone where the stock would, correct 40, 50% from its previous swing highs, spend at least a couple of years, into a trading range before you see a resurrection or a comeback rally for a stock like Anant Raj. So I think in that context, you are in a zone where the stock is going through a consolidation. If your view is specifically short term, I would suggest to keep a stop loss closer to 540, 535 mark for Anant Raj, because that could be a first litmus test of a support level for the stock in the near term. If it breaks below this, then I would believe that you might see the stock going to a further correction.
All right, a stop loss of 530 and 540 recommended by Kunal. Next question is Vimal Mehta. It's a long-term view on Bajaj Finance, Lancelot, that he wants. Buy price is 70, share quantity is 300. Bajaj Finance.
So I think, Bajaj Finance is a company that should be held in the long-term portfolio, because if you look at its asset growth, it has been growing the assets at almost 25% year on year for more than 7 years. And if you look at the margins have been well maintained. Yes, in between there were some, pressures on NPAs, but now that Bajaj Finance has converted most of their new clients onto their digital platform, and also is looking at loans through their digital platform, you are seeing a significant amount of benefits creep into the operating leverage of the company, because expenses are actually only on the digital side, and it doesn't require to have more physical branches, etc., in order to increase its reach. So I think Bajaj is in a very positive zone. You are seeing interest rates also come down, and the increase in consumer credit is good for the company. With financial controls being fairly good, NPAs being low, I think one should just hold on. And every time there's a dip in Bajaj Finance, one should look at accumulating the stock from the long-term perspective.
All right, so you could look at accumulating the stock for a long-term perspective. That's the view coming in. But on that note, we'll slip into Sri, who's written to us from Bangalore. They have a short-term query for Kunal specifically for you. They hold 1,000 shares of Canara Bank at a price of 150 rupees. They want to know if they should add more and what's the 1-month target. And the second stock is Dixon Tech. Again, they want to know whether it's a good time to add more in Dixon Tech. What's the short-term target? There is a 1-month target for this stock. So Canara Bank and Dixon Tech.
So Canara Bank and Dixon Tech both, I would suggest a hold first of all. Yes, I think at current levels, you can look at Canara Bank moving up hard to almost 160, 65 kind of a zone. Not sure, you can keep it as a 1-month target, but if you can try and extrapolate this to say 1 to 3 months, then there is a very high probability because the stock has already run up consecutively in the last 3 months from a zone where the stock has moved from 100, 110 to 145, 147 where it's trading right now. So there's bound to be a point where the stock may take a bit of a rest for a couple of months before it tries to move up higher. But then from a 1 to 3 month perspective, broadly I would think 160 plus could be a target for Canara Bank. Dixon, the good part is that the stock has already gone through a very good correction over the past 1 to 3 months. It's come back towards 14,500 levels from a recent high, which was about the 18,000 mark for Dixon Tech. So it's already like a 30% correction for the stock from its recent swing highs. That makes the risk reward attractive to average at current levels. So would suggest hold on both of these names. Dixon, you can add at current levels.
All right, let's move on. And that is a long-term query coming in for you. This is from Abhishek Mehra, Mumbai, and he wants to know about IDFC first. The buy price is 70, quantity is 5,000.
So I think IDFC First Bank is focused on the consumer retail segment, and it has brought in a lot of technological changes, and they've tried to get hold of a lot of customers. So on the liability side, the bank has built a fairly good franchise. It has expanded its branch network and its reach as well as its visibility as far as branding is concerned. However, it is now in the process of trying to improve or build its corporate book, which has not been the focus area. And going forward, maybe you could see some amount of NPAs coming up from the retail book that it had built earlier. However, NPA ratios seem to be relatively under control, so it's not that high to create a cause for worry. So if one is looking at it from a longer term perspective, it is one can hold on to it. But if one's looking at from a short-term perspective, I think if you've already made some money in the stock, one can look at booking profits.
Right, so that's about IDFC First Bank. But let's move on to the next query as well. This one is coming from Mr. Bhagwan, who's written to us from Mumbai. He's been holding 300 shares of KEC International at a price of 781 rupees and 20 shares of BSC at a price of 2160 rupees. He wants to know what should he do in the shorter term. Kunal, what is your view for a period of about 6 months? What's your view on BSC and KEC International?
So both are a hold. KEC, in fact, you can look to even average at current levels. It's just around the 700 mark. 680, 660 seems to be a good support level for KEC. So you can consider to average the stock at those levels. But yeah, I think both of these stocks have done exceptionally well. BSC, in fact, has come out of a major 30% correction from 3,000 to 3,000 levels. I think 6 odd months back towards 2,000, 2,100 mark, where the stock had tested, and now it's come back towards 2,800 plus levels. So after a decent 30% correction, the stock has managed to make a good comeback. I would believe both of these stocks have strong trends for themselves. KEC could be an average at 660 to 680 kind of a zone.
All right, so that's a take coming in on both the counters. But then a very interesting question now. Lancelot, I come to you because it's not only a stock-specific question, but also, having the entire investment mindset as far as having equity as an asset class in your portfolio is concerned. So this is Shankar from Delhi, and he wants to know if Tata Steel and Grasim are a good buy for long term. And with long term, he means 6 to 8 years. So please give your take on his selection on these two counters. But apart from that, if not these, what other stocks he can look at, and why 6 to 8 years kind of a time frame is essential to build wealth in equity if you want to consider that asset class? Lancelot.
So I think the two questions are immediately if you look at Tata Steel and Grasim, yes, they are in fundamentally growing industries. And you are seeing the growth of steel. The demand for steel growth is actually increasing. It's probably has to go up to about 140 kg, per person, with the kind of trust of the government on infrastructure as well as real estate construction that we are seeing over the next, maybe 10 years. You will see a huge demand for this steel. And Tata Steel is one of the lowest cost producers of steel in India. And given that advantage, whenever steel prices do well, yes, you will see the growth. But in the shorter term, sometimes in companies, you have allocation of capital into assets that do not generate high returns, and that can impact the valuation. So, for example, Tata Steel has invested a large amount of money in Tata Steel Europe, which is not really doing that well, and that that company has to be sold off, or it may have to be restructured, or it will take time for it to get back into profitability. So return on that capital does take a longer piece of time. So that does impact valuations in the shorter term. As far as looking at investments in terms of compounding over a period of time, one should look at two things in a stock if you expect them to compound over earnings over time. So the valuation of stock primarily depends on the earnings as well as the revenue growth. And if there is consistent revenue growth and there is consistent margin maintenance, then the earnings will also grow, and that builds in the value. So if you keep looking at companies purely from this fundamental basis and are able to figure out which stocks one should hold on for the longer term, and if you keep it in your portfolio should consistently give you earnings growth of between 16 to 18% per year based on the companies that you hold.
All right, so that's the view on Tata Steel and the metals pack. But moving on to the next query now. This is coming from Gagan, who's written to us from Bengaluru. He's been holding shares of Siemens at a price of 3,195 rupees. He wants to know whether or not it's a good stock for the long term. Lancelot, what could your view be on Siemens? Siemens Energy also came out with its results, and it's been a mixed bag. So what is your view on both of them?
I would, Kanishka, I would look at, Siemens as well as Siemens Energy. Both are in very strong companies in terms of the segments that they operate in. So Siemens offers a lot of infrastructure projects. They offer, various technological inputs for electrification for the railways and for signaling for metros. And these are things that are required, in the country, and the major players are Siemens in this space. So given that the growth potential is high, yes, in the short term, there may be some dips because government spending at some point may drop down. Definitely longer term, these companies will grow. However, in terms of valuations, Siemens is trading at almost 60 times its earnings, which is a premium valuation to pay for the stock. And maybe one can look at any correction in terms of adding this stock to the portfolio and holding on to it for a longer term. Similarly, if you look at Siemens Energy, it has been demerged out of Siemens and has got listed separately. So that has actually appreciated a lot. It's trading at a very high valuation, but longer term potential for the energy space there's a huge demand and there's huge growth potential. And that's why probably the stock is factoring in that optimism in the growth, and that's getting reflected in the share price. So both are good companies, but if one can buy them at lower valuations, your portfolios look a lot richer in the longer run.
All right, it's a good company, but then keep in mind the valuation once you're considering a buy call. But then let's move on. A lot of long-term queries coming, but then here is one short-term. Kunal, I'll come to you. This is from Nitin from Tamil Nadu, and he's bought Tata Tech and Tata Elxsi, 15 shares of Tata Elxsi at 5900, and he wants to know if he can start averaging it. And Tata Tech, he says it's at 830.
Yeah, so I think both of these stocks I would suggest to just hold on, not to average at current levels, because both of these stocks are trading below their respective 200 moving averages. And that's one of the reasons why you've not seen any major pickup of trend for both Tata Tech as well as Tata Elxsi. Their respective moving averages, I think for Tata Elxsi specifically, that level is around 5,750, 800 mark. So if the stock breaks past about the 5,700 mark, that's a strong confirmation zone that we are looking at a breakout and a start of a new trend for the stock. And for Tata Tech, the level on the 200 moving average is around 700 levels. Currently, the stock is at 675. So it's always better to wait out for those confirmation, of breakouts in terms of resistances when you're looking to average the stock, because that would probably, indicate that the stock is hitting back its momentum zone back again. So would suggest a hold as of now, but averaging at those respective levels of 200 DMA for both of these names.
So those are the levels to track for both of these Tata Group companies. But on that note, we'll slip into a very short break. Be right back with more of your queries to be answered on the other side. Studio, well, let's get back to all the queries then that you have been sending us. And this one is coming from Subrata Mukherjee, written to us from Kolkata. They want an investment, long-term investment view on PFC, REC and Coal India. Lancelot, let me come to you. What is your view on these three companies? What would you suggest? Are the fundamentals strong enough for a longer-term investment? PFC, REC and Coal India.
So I think, if you look at the business perspective, the businesses of all the three are growing, because as far as PFC and REC are concerned, the need for financing electrification in the country is huge, and it is growing, year on year. So especially with the thrust on renewable energy, a lot more financing needs to be done there. However, there are some risks because it's a very specific, sector-specific financing that is being done, that tomorrow, if there is overcapacity and there are NPAs in the sector, it could impact their balance sheets, negatively, and that could change the valuations or the growth outlook. So one should be cognizant of that fact while looking at the valuations for purchasing these three companies. From a long-term perspective, yes, the stocks looking attractive, but if you look at it at the current levels, valuations are a little bit expensive for all the three, and hence one should wait for a correction if one needs to hold on to the stock. If you are already making a high profit, then one can look at booking some partial profits here, and whenever there's a correction, one can add it back to the portfolio and increase the quantities.
All right, let's move on and let's take a question on short-term horizon. Kunal, this is for you. This is from Ms. Rekha, and she's holding 1160 shares each in Ujjivan Small Finance Bank at rupees 28, and she wants to know if she can average it out right now.
I think the stock has been doing reasonably well. Ujjivan Small Finance Bank is now almost at 50 plus mark. So I think in that sense, it's done reasonably well for itself. Since you've purchased at lower levels, I would suggest to hold on to the stock. And yeah, I think averaging also at current levels could be a good strategy. The stock is nearing a breakout of a major resistance on the monthly charts, monthly, quarterly charts. So I think in that sense, there could be additional momentum the stock may get into over the next 3 to 6 months at least. So in that sense, I would suggest a hold as well as an average at current levels.
All right, so that's the view on Ujjivan Small Finance Bank. But moving on to the next question, this one is actually wanting to know which stocks are good in the insurance and healthcare sector, especially hospital. This is K. Narasimha Reddy writing from Hyderabad. Lancelot, let me come to you. Your two picks from the insurance and hospital sector, preferably from the mid-cap space for a longer-term point of view.
So I think if one looks at the insurance space, I think from the general insurance place, I would think that Go Digit Insurance offers opportunity because it's in the mid cap space. It is providing you with a digital insurance platform, and one can buy your insurance as well as take your claims online. However, in terms of valuations, the stock had come out of an IPO recently and has really shot up thereafter. So from valuation perspective, does look a little expensive. One should wait for some correction before one needs to add, but it's long term, it's a good buy on the general insurance space. As far as life insurance companies are concerned, I think SBI Life Insurance at this point in time offers value as well as, there is a good growth potential. Now that most of the companies are focused on, achieving protection, growth in the protection policies as opposed to the investment kind of policies, you are seeing the traction in that space build up with more and more awareness of and insurance penetration improving. So I think that SBI Life would be a good opportunity to look at adding to the portfolio from the insurance space. As far as hospitals are concerned, I think one look at Apollo and Narayana Hrudayalaya. These are the two leaders in this space. They have been growing significantly their footprint, as well as they're focusing on medical tourism. Narayana has tied up with a hospital in the US, hospital chain in the UK, which is actually where they will be able to do treatment of patients under the NHS. So there's significant upside potential, but in both the cases, at this point in time, valuations are a little expensive. So one needs to be careful when accumulating the stocks, probably wait for a bit of a decline and then buy into these stocks.
So that is how your healthcare portfolio should be. Kunal, coming to you, this is a short-term query on GAIL and from Chandrasekhar, Hyderabad. He's bought it at 180.
So I would suggest to hold on to the stock as of now. Short-term wise, you might look at 188, 187 as a target for GAIL. That's the resistance the stock has been testing time and again over the last couple of months at least. And on the downside, closer to 176 could be a stop loss for this trade.
All right, so that's the stop loss for GAIL. But that was the last query of the day. Thank you so much, Kunal and Lancelot, for joining us today and helping us answer all the queries that our viewers have been sending us. On that note, we'll let you go. Well, with that, we're completely timed out on this edition of Buy Now, Sell Now. Kavita and I will take your leave, but don't go anywhere. Markets at noon coming up next.